Let's bring in Waddell Associates CEO and President David Waddell, because David, as we are looking at the NASDAQ hitting yet another all-time record close, we've got 2.5 minutes left. You're saying too much of a run-up in technology, and yet, do you like it?
I mean, I still like it. I think it's positive in terms of the bias because the earnings are so good, the revenues continue to be good. You know, it won't break until profit margins roll over, the fundamentals roll over. But I do think it can be used at this point as a funding currency to go into some other sectors that some of your previous guests spoke of. So I think people are, you know, out of balance in their portfolio way too much towards the top 5 names in the S&P, which are all technology companies.
Do you not worry about the overhang of regulation? The Federal Trade Commission has, I guess, just announced they will be probing big tech companies. Investigations aren't some type of sort of Damocles here on the shares?
I don't think so. I mean, you know, it creates a little bit of shade on them maybe, but they went after Microsoft, you know, and that was a big deal. And I think Microsoft's worth about $1.5 trillion. So they don't really have a pure record on breaking up these huge conglomerates. I mean, there were very few. AT&T might have been the last one. So I don't think that those threats really manifest into much. They've gone after them here or there, Facebook, yada, yada, and it hadn't slowed the train.
That's a technical term, yada, yada. Dave, would you go with the big names, or would you start to go into some of the smaller sort of ecosystem type of names, suppliers to Apple, or perhaps smaller graphic chips?
Well, I mean, certainly this market has been large cap biased to a historic degree. So it's worth looking down into the mid cap, small cap growth boxes. But I will tell you, historically, those boxes don't tend to do very well. They tend to be overvalued with the hype that surrounds those smaller names. So at this point in the cycle, in the U.S., you really only win one way, which is that earnings rise. And by the way, I think this market's looking past 2020 into 2021. If the world holds up, then you see earnings growth, at least the analysts do, of 20% between now and then. That's the upward bias in the market, I think. But if you believe that there is an economic recovery afoot, you know, barring the coronavirus, then yeah, you want to move down the cap spectrum, whether it's into the small cap growth box or not. I don't know. Had a great year last year.